just kind of getting everything settled here, guys. First of all, thank you so much for joining us. We're super excited to be on with you guys doing our pretty much annual at this point, end of the year roundtable Q&A session with our referral network. It's awesome. It's grown year over year. We really get a lot of engagement in this, and to be honest, it really helps us going forward with providing resources back to you guys, our referral partners. So the idea behind today, there isn't a presentation. If you've been on these calls before, normally you're used to a presentation, whether that's Pat and I doing it together or Steve and I doing it together. There's usually a presentation, but that's not the case today. Today we're here to answer your questions. We brought in the industry experts to really dive in deep on some of these topics, and that's what we're here to do is get you guys the answers. I can't read the Q&A. I don't know if you guys can. Can we slide the TV a little closer? I'm just blind, so I don't know if you guys can see it better than I can. Oh,
I think before we even we are live here, right?
Yeah. I'm just making sure that we're getting everything settled.
Yeah. Well, just about to make sure I wasn't about to, waste the good stuff on nobody.
No, I think we got like 70 something people on already.
Okay, very cool. So, I think before we even get to the Q&A, it's probably a good idea just, for those of you that maybe aren't in touch with us every single day or, know exactly kind of what's going on, at the company right now. A big initiative, that kind of took off halfway of this year and certainly a huge initiative, moving forward 2024 and so on, has been really to diversify our product offerings. I think that, there's a lot of brokers like us that exist that talk about their ability to do other forms of business funding outside of the cash advance. They talk about having the ability to do equipment financing, ABL, factoring, commercial, SBA. But the truth of the matter is it's just simply not the case. We know the brokers, we know our competitors, and it's been a little bit of a fad and a marketing ploy, to market that they do these other services, and to try to attract traffic, right? Hey, we do equipment financing, we do commercial, we do SBA. You now go to those brokers to apply for that type of funding. And very quickly you are pitched the bait and switch model, which is, hey, you're not qualifying for commercial, you're not qualifying for SBA, but I have the working capital here for you. And for us, we wanted to, make sure that as we, expanded our product offering, that it wasn't that, right? It wasn't just a marketing pitch. It wasn't just us saying, hey, we now do commercial, we now do SBA to attract more interest from partners and from borrowers, but to actually build out the infrastructure here at the company to be able to facilitate these other products and to truly make us a wholesale brokerage. So, with that being said, at the other end of the table, Steve Rodriguez has been brought onto the team to oversee our commercial division. Steve has over 20, 30 years of experience in all facets of commercial lending.
It's amazing because Steve's actually only 27 years old, so it's kind of crazy.
Oddly enough.
So, long story short, it was important to make it known that the company has actually made the investments in building out the infrastructure, the processes, the people, that have the experience in these other products, have the lending relationships in these other products, but have the know-how, the ability to speak to a business owner, speak to a partner, identify a real opportunity, provide real direction, to keep the process moving as long as streamlinely and as seamlessly as possible. So that's kind of the big message and why the roundtable is what it is today. We're trying to change all of our conversations to be much more broad, right? We don't want to just talk about 3 to 6 months of bank statements and $50,000 for the local pizzeria. We want to, really educate these business owners and partners to, looking at these businesses from inside out and, do you own that building that you're operating out of? And if not, and you're interested, we could walk you through that process of how to own your own commercial building or, how to buy out that partner or, leverage the assets within your business to create lines of credit that you could have access to and utilize to grow your business. So there's much more out there than just merchant cash advance. Obviously, merchant cash advance is still a premium focus of ours, as you know, it speaks to the broadest of communities of business owners, because just naturally a lot of people qualify for that. But when a business owner comes through the door, it's really more about, for us, what do they qualify for, and what are they looking to accomplish, and then making sure that we truly get them into the best product for them in that situation, to help them grow their business and overcome whatever hurdle or challenge may be in front of them there. So
you bring up a lot of great points, and I don't want to go too fast or too quick, right? But the one thing that I want to point out is ROK is still a broker, right? Like, that's who we are. It's what we do. What we've done is taken that same mentality, the same process, technology. I mean, I've heard Steve say it himself that, like, he feels the honor of being able to bolt on to all of that and help us build out this commercial division. But that's what's then happening there too, right? Is we're still the broker, right? I'm not saying a broker, we're the broker. And what I mean by that is we have all the knowledge, the lending relationships, to be able to facilitate all of these deals. And regardless of the product, we have multiple lenders that we're going to for all of these products. So, not just the products being diverse, right? But sometimes it's the bait and switch on, oh, well, I was told that you could help my industry and now you can't, right? Or, I heard that you could do a shorter time in business, but you can't, or, I don't meet your sales minimums, right? We want to clear all the air. There's no smoke here, right? There's no smoke and mirrors. We want you to get real information. We've always taken that educative approach, and now, we've opened that up into these other products. And that's what a huge initiative is for us, is to educate people like the ones on this call about what is it we're doing and how are we doing it, because then you can leverage it. Right. And I already see some things pouring into the chat. Somebody's asking, is there somewhere that I can track my progress and log in and, get deals from front to back, from application to approval and approval to funding? Absolutely, right? Just to pull one out of the Q&A quick, we have our partner portal, which is powered by Salesforce, where you get direct access to our CRM, and you can follow everything from front to back, from literally stage 1 all the way to stage 10 funded. And that's regardless of product, that's regardless of what program you're looking at. You have access to that throughout the entire process. There's also a ton of marketing materials, training materials on the different products. You get landing pages, and our portal is certainly interactive and gives you everything that you need. I don't want to call it a broker in a box, but everything you need to bolt on to us, and be able to offer all of our products as an extension of your own. And that's the ultimate goal here, is to give people access to all of these different programs. I don't want to dive right into the Q&A, but Steve, if you don't mind, like, we know when we say ROK Commercial, we know what we're talking about, and only because the last 5 months
give us the overview.
You've helped drill it into our heads, right? But if you don't mind, I heard you even before saying, there's 5 verticals, right? Can you go into some of these verticals, talk a little bit about these products, and just give a little bit of background on some of the deals that we're packaging and getting done already, under your leadership?
Sure. Thank you, Tony. So thanks for the intro, guys. So quick overview. Our commercial finance division, as Tony noted, primarily covers 5 main verticals, lending verticals, which obviously were not really touched on too much by ROK previously before establishing the division. Commercial real estate lending, which includes really all asset classes in commercial real estate, multifamily properties, mixed use, office, industrial, warehouse. Even includes residential investment properties, single family through 4-unit properties, residential investments. So that's for tenant use, tenant occupancy. We also cover equipment financing. We have the micro up to $250K, or small ticket items up to $250K, and then $250 plus, which is considered, larger ticket or mid market. We also work with SBA financing, which has a wide variety of allowable uses of proceeds. That's probably has the widest range for use of proceeds out of all the different products available. We also work with asset-based lending and AR credit facilities. So leveraging specific asset classes like accounts receivables and inventory. We can structure lines of credit or transactional credit facilities off of invoices or, again, accounts receivables. And then lastly, structured debt or structured credit, leverage debt might be another way to say it. In that case, we would structure a line of credit across that's leveraging multiple asset classes, combination of AR, inventory, fixed assets, potentially even real estate on one line typically. So with that combination of products that we can work with a business that's producing, north of, let's say, 3 million in annual revenue, a healthy business that's producing north of 3 million in annual revenue, and even many cases, businesses that are producing less than that, we can look for a variety of different options to meet their financing objectives. If they're looking for a line of credit for expansion or general working capital use, debt consolidation, real estate acquisition, whatever the case is, we can cover it through any of these verticals. One quick note that I just want to touch on and add on here, as Pat noted and Tony noted as well, there's a lot of brokers out there in the industry that came into the industry with a focus on the MCA space. And as Pat said, they are trying or suggesting that they're in these verticals or they can work with these products. And please believe me when I tell you, from my experience, they might know how to package a deal to some degree. Maybe they know how to package an SBA deal. Maybe they know how to package an AR factoring deal. But outside of that, and conducting the analytics that's necessary on the financials and credit review, I can guarantee you they are falling short in that capacity. And that's what we bring to the table now here at ROK. We have that ability. We have the analytics. We are building this team. And the commitment here from ROK Financial to really grow this division for 2024 is really the reason I'm here.
Yeah, absolutely. And just to kind of piggyback on that, like, the reason why we're able to say that is, and it's not speculation, is because to an extent, for a period of time, that was us, right? Never with the negative intention of like a bait and switch and saying, hey, we can facilitate these programs, but we actually couldn't. No, we always had intention, and we always saw the value in being able to offer other products to our customer base outside of cash advance. And we gave it a valiant effort, right? When it comes to cash advance, we've been doing this pretty much longer than anybody else that's out there. We certainly have probably the strongest reputation in the industry with thousands of reviews online, Google, Trustpilot, etc. We have an extremely experienced team and staff here. And, for a good year and a half, we put a real valiant effort into specifically equipment financing and SBA, and brought on some key partners, even at one point partnered with somebody specifically that did SBA. But what we found was, it really requires the specialist. It really requires somebody with the experience. But not every company is willing to go make that investment, right? To invest in a new division and bring on the experts and to invest in that infrastructure of a division that could actually facilitate these loans. It's not cheap, so it's not something that just anybody can go and do. And we saw firsthand when we tried to do it ourselves, even though it was a valiant effort, and we there was we were genuine in those efforts, and we, Tony went and became a CLFP Tony and, certified lease and finance professional. And, we went and established the relationships, brought on certain strategic partners, and we were still coming up short, even with, those are efforts that even the brokerages that are out there that I'm talking about, they haven't even made those efforts yet. Right. But we did. And, but even still, we were coming up short. So we knew that if this was something that we wanted to be a real player in and genuinely be able to facilitate these commercial and equipment opportunities, we were going to need to really bring on and build out a process to genuinely be able to do so. And that's where Steve goes into the analytics and understanding the financials and being able to structure and place the deal with the correct lender to give it real legs and to actually give your client or yourself the, a genuine shot at, trying to receive that funding.
Anybody can provide a pre-approval.
Yeah.
Right. Like that's the biggest crock of BS. I'll save the terms that I really want to use.
Shit.
Yeah. Thank you. It is.
Yeah.
It's the biggest bait and switch in the game. I always say why our referral network has worked is because of what we've done on the back end, and that's getting real approvals but also real fundings, right? Because I've seen it time and time again where somebody will refer us a deal. Hey, this customer's approved for this, they have this, what can you guys do to beat it out? And when we actually get a chance to pop the hood on the deal, it's nothing like what they told us it was going to be. In fact, we're 800 degrees in the other direction. Reality starts to step in, you know what I mean? And we've always operated there. We've always done the right thing. You talked about some of the efforts. I mean, we even, in COVID, we were out there developing these relationships. We were at factoring conferences, equipment conferences, commercial real estate conferences, meeting the lenders, talking to the people. We have great relationships with these people. They were telling us, hey, we love what you guys are doing and what your initiative is, but we haven't caught stride, and we were well aware of it. So
We're not the experts.
no, we're not. So we knew we
But
needed.
Steve is.
Yeah, we knew we needed to dive in, and we definitely dove in head first. I'll be the first person to tell you, Steve is an awesome resource for us, our company, and everybody on this call. Everyone benefits from him being around because he just helps elevate everybody's knowledge. And that's really what we're here to do for you guys, right? I don't want to necessarily go product by product, Steve, but maybe just talk a little bit about what makes some of these things a little different. I see we have a startup question in there. I'm sure people are wondering about credit and criterias. Just give me some broad strokes. You don't have to go too crazy, but can we help a startup in some of these areas, and what would that look like? And I know banks view a startup one way, just dive in a little bit if you don't mind.
For sure. Thanks, Tony. So all right. So touching there first, let's lead off with startups. Startups are definitely going to be the toughest criteria, toughest type of business for us to work with. For our products, usually outside of SBA, for the most part, we're looking for more established businesses, especially when we're talking about structured debt, ABL. Typically we're looking for healthy financials, several years of healthy financials where we can show a certain trend in their statement of cash flows year over year. That's standard, right? So again, that's ABL and structured debt or leveraged debt. Equipment and SBA, we can certainly AR factoring, we can work with businesses, not necessarily that are true startups. In some cases, SBA, we can swing maybe in up to a $50,000 micro loan with really strong personal credit and a solid business plan. And prior industry experience, 3 years of prior industry experience. That's really the capacity of where startup lending really starts and finishes for us.
And I really appreciate you providing some insight around that, because that's another one, like pre-approval, that people will just use as a marketing tool, right?
Yeah.
We help startups, and startup is a broad term,
Definitely.
like you started to get into it a little bit, right? But once a business has formed the business, right? Like you have a business checking account, you start to generate some revenue, and we start to get the wheels turning, the doors open up pretty quickly.
Certainly.
You know what I mean? Whether we're talking unsecured or secured lending, the doors start to open up pretty quickly. So if you want to dive into some of that too, like that'd be great, I think, too.
Yeah. All right. So in a startup sense, right? Like, so as Tony said, like that's a broad definition, right? To me, when I say startup, I mean, they haven't even produced $1 of revenue, right? They're pre-revenue. They have a business plan. They're ready to get going. Maybe they need some initial capital to get off the ground. Again, in that range, we're looking at maybe an SBA micro loan up to $50,000 with really strong personal credit and a solid business plan.
Sorry, I have Tina interrupting.
I love
killing
this.
me that we don't have our ROK sign.
I love
up, you know what I
this.
mean?
I
Like,
love
we don't
this.
even know who you're
Gotta add the
talking
logo.
I might hang on.
to. Yeah,
Who are these guys?
I don't even know who we're talking to. There we go.
Let me lower the seat a little bit.
There we go.
Got you guys feeling like giants
All
now.
right. Yes, it's the ROK boys.
now that everyone knows who we are.
But guys, I'm sorry.
Yeah, no. So
Thank you, Tina.
Very quickly though, for a business that carries receivables, typically we can get right into within 3 to 4 months of producing decent receivables and showing some cash flow on an income cash basis income on those receivables that they're producing, we can start to factor and leverage those receivables, and we can typically go up to, for a new business, 75 to 80% in many cases advance rate on the receivable value. Now, again, that's transactional. So what I mean by that is, let's say we have a company that has that sends out an invoice to one of their customers. I don't know, they make widgets, right? They manufacture widgets, and they send out an invoice to one of their buyers, a company that's buying. Let's say they're a wholesaler, and their customer is a retailer. They're buying their widgets, and they're going to put it on their shelves and sell it in their store. As if most are not aware of this, let me explain. Most businesses that are participating on a B2B business level, they're not getting paid right up front for the deliverables. In many cases, they're getting paid 30, 60, 90 days out from their customer. That invoice that they're waiting to be paid on is an asset, and we can leverage that asset. And when I say 80 to 75 to 80% advance rate for a new business, so if you have $100,000, that business has a $100,000 invoice, we can typically go to 75,000 on an advance on that invoice. So if they have that invoice, they're waiting 60 days to be paid on it, we can get them cash for it now. So now they can take that cash. They might be able to go buy more product. They might be able to hire staff, take on another job, whatever the case is that allows them to grow at a little bit of a faster pace. And they can continue re-upping that invoice factoring facility with each new invoice that they send out to their customers.
When we were doing that round robin of trying to figure out a lot of this stuff, we learned that the average factoring line is something like 4.5 or 5.5 years that a company will stay with a factoring lender. Right. And once it's part of your process, like I've seen, like you'll just outgrow the lender, but you're still factoring your receivables, right? So like, even if you are somebody that as you are growing, you kind of outgrow one line, again, we're the broker. We're here to help you go from one to the next. You can go from unsecured to secured products. You can get an SBA today and a line of credit 6 months from that. Like that's the beauty of what we do and how we do it. Kind of circling back to what Pat was saying earlier, we really take the approach of, hey, what are you trying to do with the money? Because we will back you into the best product that will service that need.
And that was something that I wanted to make, very clear on this particular webinar was, this recent initiative of, expanding that product offering and going into the commercial, right? Like if you're on this call and you're a partner of ours, if you're not on the edge of the seat, you're missing the point here, right? Like this should be something that is very exciting to everybody because we've increased the way that you can earn when working with ROK Financial, right? If we were a company, like we were months back where all we really facilitated and focused on was the cash advance, when you brought a borrower to us that was either overqualified or just simply not interested in the cash advance, there wasn't really the ability to monetize at that point, right? So this is now, the message to get across to everybody is any client that you might have and any type of financing that they're interested in, you can now come to one place where we sincerely have the internal operation, the infrastructure built out, the experts on staff to work any of these different types of transactions from cash advance to SBA to commercial. So that's, that's the big exciting news. And that's the big initiative for 2024 to continue to grow this platform out. And a big part of that is communication and education to our partner base, right? One, communicating the message that we have the ability to get these other products done, but also educate you guys on, what preliminary questions could you be asking your customer base and what conversations could you be having to identify if there's a legitimate opportunity to do something large scale on a commercial mortgage or some type of structured debt or something alike. So that's kind of the big, the big message. A lot of the content, a lot of the webinars you're going to see from us moving forward aren't going to be so working capital focused. It's going to be more broad range, right? It's going to be more commercial, working capital, just business financing in general, right? Just general education around business finance, how we can help, listening to the different scenarios, and then ultimately backing it into the product or the vertical that makes the most sense. My favorite thing about the Roundtable webinar is it kind of scratches that itch of my lifelong dream of being like a Howard Stern, like radio jock. So, if we're able to, get some people raising their hand to ask questions and maybe girls, if you don't mind, if we can even click on some people and let them join in with us. And if anybody out there has questions, deal scenarios, just wants a little bit more information on a specific product that we talked about here, or I see a few different scenarios being thrown at us in the chat. So obviously with the commercial, right, it can get a little in depth. We'll try to keep, every call in to like 30 seconds, try to get, a quick understanding, give you some quick insight. And then ultimately it's all going to end with reach out and to somebody on our team and continue that conversation. But I always like, to take this opportunity, especially for myself, I don't get to speak to our customers or our partners all the time anymore. So an opportunity to kind of, hear directly and get some feedback and answer some questions and, continue to pass on some education, to our customer and partner base. So I know we have 2 hands raised now. We have Drew at the top, or a couple of hands raised, actually. If you'd like to raise your hand to come on live with us and speak to us and ask a question or whatever it is that you'd like to do. All right, Drew Andrews, you're on mute, but okay, there you are.
Hey, Patrick, good to see you again. I've been around for a couple of years with ROK. I love the company. I can't say enough good things about them. But my portal needs to be updated with some marketing materials like leave behinds I can print out. The only thing in my portal is the ROK landing page, which I have to have on everything. But who would I need to speak to? I don't want to bother Andrew or anybody. If I need to update on some portal marketing materials, who do you recommend I touch base with?
Yeah, absolutely. So I think any of that type of feedback, you should have a direct point of contact on the partnership side of the business. I know you referenced Andrew. So whether it is Andrew, Tony, Tim runs that team, right now what you're doing is fantastic as well. And just kind of pinging us and giving that giving us that insight. We are, working on right now a new batch of portal collateral, just kind of updating the look and the feel. We're also adding some functionality to the portal to where, whether it's a landing page or marketing collateral. The landing page, I think, is already set up, but the marketing collateral is next, where you'll actually be able to upload your own logo as well. You can co-brand or white label. You guys are going to have the option moving forward right there in the portal. But duly noted, we have our marketing team here with us in the studio. They're kind of facilitating behind the scenes here. So duly noted. But we are, just so you know, we are working on updating that catalog of content. So you will see that coming your way shortly here, again, with the added ability to also add your own logo if you like to co-brand it or even white label it to just represent your brand. That's all being built out at the moment.
Hey, for anybody that's listening, I just want to thank you again for the hard work and the team. It's unbelievable. The warriors you guys are to go to work for people. It's unbelievable.
That, Drew, you're one of us.
Yeah, you're a rock star, Drew. I just want you to know that, and thank you for everything. And we'll definitely make sure that your point of contact reaches out. I keep getting the head nods from the marketing girls that they've already pinged your point of contact. So somebody should be reaching out here shortly.
All right. Merry Christmas, guys. Thank you again.
Same to you. Happy holidays, Drew. Love hearing from the partner.
Yeah, that was awesome.
All right. Who do we have next? Jamie.
Okay. Hello, can you hear me?
Jamie, you're live.
Yeah, I have a question here, and I don't know who I should speak to.
Sure.
I have no problems with marketing. I own a YouTube channel. I use that a lot for my marketing. I have leads
Fantastic.
drummed up that are in the system that's been sitting there for 2 weeks and nobody will touch them.
You've sent over the leads to us?
Yep.
Okay.
They're in this. Yep. There's a team. There's me, my daughter, and my mom.
Okay.
And our leads have not been worked with in 2 weeks. They're just sitting there.
So just so you know, a couple of things, right? So automatically, when you upload a lead into our system, we have a ton of marketing automation built out. So just by putting a record into the system, those leads are absolutely receiving communication from us. Communication could vary from just a general, welcome, this is what we're able to do, all the way to here's the Calendly link to schedule a call with us. We automatically send out our funding application. However, points of contact will be reaching out as well. The only only time that we do not have a live point of contact here in the building reaching out to a lead is if that lead comes in and it's unqualified. So I would just want to make sure that the leads that you entered are doing a minimum of $5,000 per month in monthly deposits. They're operating out of a business checking account, and they have at least 6 months time in business.
Yeah, we were told to stop putting leads into the system. So we haven't put any in there, and I started giving them to a different company. I'm
Okay.
not sure if you guys are aware of that, but if
So
somebody can look into it,
if
that
you
I would
weren't putting them
appreciate
into
it.
the system, where were you sending them that they hadn't been worked?
I put them right into the landing page that I was given. So they're there in the pipeline. They've never made it down to the opportunity. They've been in the pipeline for 2 weeks. We were told to stop putting them in.
Can I ask where you might have gotten these leads? Like, just because
They're filing for applications. I have a broker, and also I use my YouTube channel. I have a link down there with different companies that I work with.
okay, so like
So my viewers can go click on it, put in their information, whatever. But I got a text from Dylan, and all three of us was told to quit putting leads in there, and they've been sitting there for 2 weeks. So I'm wondering what the hell's going on here, really, to tell you the truth.
Yeah, same. And obviously, I don't have vision on that at the moment, so I can't actually pull up the records and see what's going on. But listen, this is why we do this, right? We consistently put ourselves out there to take feedback from our partners and our customers. We want to hear where we can get better. Obviously, I'd love to see what happened in this specific scenario. I could tell you, the three of us at this table and the 75 people upstairs in our office show up every day in that office to communicate to business owners, to see how we can help them. So it would definitely be a shock to me as to why these particular leads are just not being reached out to or called. But for, nonetheless, absolutely appreciate you bringing this to our attention. Note has been made of it. We're going to look into this right after this call. And then I can assure you, you'll be getting a phone call from me directly, just letting you know exactly what took place. Because, again, it just, if you just kind of take a step back and, if you look at our reviews online and if you, look at the efforts that we put into,
Oh yeah, you guys got awesome reviews.
Yeah, no.
Yeah.
So like, if that was our typical MO, all of efforts like this would just be for no good reason, right? Like if we weren't interested in calling the leads or working the deals, I certainly wouldn't take the time to get on and try to educate, in mass crowds like this. So, but
Well, that's
I
why
also wouldn't know if you didn't tell me. So I
right.
am
That's why I'm
so
here.
appreciative and so thankful to you for
Yeah.
speaking up and telling me. I have a great relationship with Dylan. He's somebody newer on our team, but he's a great kid. And we're gonna find out right now. Actually, we might even be able to get you an answer and even call you back on here in a few minutes. So if there's anything else, please fire it away at us. Otherwise, give us a minute. We want to look into that, and then we're probably going to have you jump back on and talk through it.
Okay. Yeah. No, that's my only concern. Everything else was great.
All right. Awesome. So great. We want to have you back on the team. Obviously, we appreciate all of our partners. We don't want to see anybody go to one of our competitors, especially after we just told you how they operate. So let us, the girls are on it right now. They're looking into what went on with that. And, please hang around if you can. We'd love to call you back on and kind of give you an explanation so others can hear as well. Right?
Yes. Perfect. Thank you.
Awesome. Thank you. If you guys could just ping, our partnership team and let's see what happened there. Awesome. Who's next? Niall.
Hey, hello guys. I'm actually a new partner with you.
Okay.
And my question, I have a lot of contacts with contractors, and that's primarily it's been my field. How do I approach them on this monetization that you guys are talking about, where they have the ability to lend on their equipment, but also perhaps on these invoices that are coming in? And the approach, like how would you recommend on the approach on that kind of conversation, other than just saying, hey guys, I can, have you thought about maybe leveraging, some of the equipment, your invoices, how that looks like, and, like what kind of time frame would that be to turn something around, or how would we do that warm handoff to you in this portal when you're talking about different elements?
Yep. No, it's a great question. I'll kind of kick us off here, and then Steve, I'm gonna kick down to you. So basically, in our core business, right, which is the cash advance, which is just straight working capital. It's unsecured. The transactions are extremely fast, 1 to 3 business days. One of the leading industries that we lend to in that particular product is the construction business. So what we're finding a lot of times is contractors are, laying out money for material and labor, and then they have that money tied up in a particular job, and then it comes time to take on the next job, but they don't have the money for the labor or the materials for that job because they're being waited, they're waiting to be paid on the one prior. So that's where working capital or a line of credit can be an extreme benefit to a construction company, where they can have a pool of money that they can tap into to float the start of that next job while they're waiting to get paid on the job prior. So a lot of times for contractors, just a very simple, straightforward, business line of credit or a cash advance or a working capital loan, could be a major benefit to a construction company, because a lot of times it's just cash flow issues that they're dealing with.
And it's a short-term need, right? So we provide that
Yes.
solution that can help that bridge that gap. The only thing that I want to add in is, I know you mentioned the portal and a warm handoff. Just to address that, whatever style works for you, right? Like, I think about us, we don't submit through portal for all of our lenders. Sometimes it's email submissions, right? So if there's a way that you and your customers, and this goes for everybody on the call, you and your customers need to be handled regardless of our portal and our out of the box experience, just let us know. If you want to make email introductions, you want to have conversations prior to, we're all about that stuff, so that you feel comfortable and have the right process set up for you and success for the partnership. I'm going to let Steve go into the secured side of things, but I just
And if you just don't mind, just really quick, on your typical, contractors, remodelers, plumbers, electricians, painters, a lot of times for them, again, it's just a simple cash flow issue. So the business line of credit, the working capital, as I mentioned, are great products just to get them access to capital to kind of keep their operation moving. When you do have if you have, one good thing is if you're dealing with a lot of contractors, finding out, right, exactly, what is their business model? Are they into the fix and flip? Because now this is when you start edging down the table to the Steve side, right? If you have somebody who's in, fix and flips, investment properties, or the more sophisticated construction company that's doing, big development or commercial buildings, or they have a ton of equipment, this is where you can go a more conventional route. And that's where I'll let Steve kind of pick up. So it does vary from your typical, residential contractor, general contractor, to your more sophisticated niche contractors that maybe have larger businesses, or again, into the investment properties and things of that nature. So it could be as simple as a line of credit or working capital, or now what Steve will get into, which will be kind of more, conventional style, programs and whatnot.
Yeah. So the first thing, like Pat talked about just now, there's a variety of different types of contractors out there, right? So there's general contractors, there's subcontractors, there's real estate developers, there's commercial property developers, there's land development companies where, they're developing entire several plots of land all at once for multi-purposes in a mixed use project. So that's really the first question that I would always start with is, identifying what type of contractor we're talking about and overall what their objectives are. If it's, fix and flip or residential development for buy and hold for rental purposes, we have one set of products for those. If they're looking more towards more traditional financing and lines of credit, working capital use, expansion, we can look at a couple of different variety of different options. SBA is always a potential option if they're producing reasonable cash flow. That's always an option. We can go up to 150 for faster turnaround times, more like a 20-day turnaround time if they're showing at least $1 in profit on their last filed tax return with decent credit. If they're looking for more towards 500,000, somewhere between 150 and 500,000 with decent credit and decent EBITDA, reasonable EBITDA that allows them to qualify for the minimum cash flow requirements per SBA guidelines, then that's a product that we can work with. That's a term product that goes up to 10 years on a monthly payment schedule, prime plus 2.75 in the interest rate. So currently 11.25. Very, very competitive product. If they need to go larger, again, with decent cash flow, decent credit, we could look at an SBA 7A loan. If they have receivables, they have AR, accounts receivables, we can leverage those receivables potentially. And now we have to look at, when we get into that, we have to look at whether or not they're a GC or a sub, if they have retainage, non-retainage, if they're doing bonded work, non-bonded work. This gets very specific. And of course, we need to do an in-depth analysis of their financials and conduct a real solid interview with the client as well. Outside of that, if they have equipment, we can leverage the equipment if it's free and clear or if it has equity. So for contractors, it gets really broad. And I mean, like with construction equipment, yellow iron, certain materials handling equipment, trenching equipment, all of that stuff is fair game. And our lenders on the equipment side like to leverage that sort of stuff.
And Niall, something that may really help you out here, just to kind of, back up a little bit, because again, it gets so, there's a lot of different ways that this can go depending on what they're looking for. But ultimately what we're really narrowing down to is what is the pain in the business, right? And I'll let, Tony doesn't like to talk about this, but he's our internal sales trainer here in the company. And, Tony, if you were, going to teach Niall a little bit about digging for the pain, right? Interacting with contractors, wants to see how, she could be positioned to help these contractors. What are some good conversation starters or things that she could do to help figure out?
Okay, but hold on, before you go that direction, I appreciate that like wholeheartedly, and it would probably be great for a lot of people. So that's actually one of my strengths, is that I have these relationships and I understand the business. I've been in it since '86. I'm also a developer, an investor, a remodeler myself. Like I can throw on my tool bags and go out there with them and get the job done if, they're sick or they fall short. So yeah, no, that part of it, so I buy and sell, a lot of my own stuff. I just did 3 just in the last couple months. But my specific question, I guess, is, like I don't have the specifics on all the intricacies of the types of how you guys can monetize this. So creating that relationship or bringing them to you and saying, hey, like they can take a look at all these different aspects of your business. But then I bring them to you, then does that something that I'm handing them over to you at that point, and then you guys continue the relationship? Then as a broker, how is my like how do I get the compensation there for bringing another like long-term client to you, where now they're going to grow their business with you, but say that I'm out of it, I'm bringing them to you, I'm in the first part of it, but then they have bigger needs and they come to you for other stuff and they continue that. Is that something that the client is then attached to me as a broker moving
Correct.
forward for the big picture, or
Yeah.
do I work, with them through every step and phase and I get to grow, I get to learn about all of that along the way, or does a lot of it happen on the back end?
No, absolutely. So it's a great question. So that's why we, when we shifted our business model to really be, there was a time when a lot of all of the leads that we generated were through like traditional marketing channels, whether it be, digital marketing through Google or direct mail campaigns. When we made the decision to shift our business 100% referral focused, because that's the only way that we get business today is strictly through relationships like you that refer their customers to us. And we understood right away that who our customer was changed, right? When you're doing traditional marketing, our only customer was the business owner, right? When you shift your focus to being partner centric, our new customer becomes the referral partner. So we had to, shift our business and provide resources that supported that new method of deal flow, right? So we created our partner portal. The reason for the portal is to provide transparency back to our partners. So any client that you refer over to us will come into our system coded to you. As that client moves around our system, whether it's new business, it's a second or third transaction that we do with the borrower, you move the borrower over into commercial, they do an SBA loan, all of this would be continued to be tied to you, and you would be able to track all of this in your portal. So even if, you were part of the first transaction, and let's just say 3-4 months later, they reached out to us and another transaction started, there's everything is very fast moving here. So I don't know that we would necessarily reach out and be like, hey, Niall, we're working on this deal. But I can assure you that if you were in your portal viewing your pipeline, you would
Yes.
absolutely see that another opportunity had been opened and we're working with that client again. And at that point, if you reached out and asked about it, obviously we're giving you that transparency for a reason. We want you to have that confidence that when you refer a customer to us, that's your customer. And it's our job to try to help that customer across as many products or as many times as possible. And, for you to continue to earn as well. This is a revenue stream for our partners. We very much pitch the model that you're running a business within ours. And, we want to provide that transparency and we want you to be a part of every transaction that takes place.
No, that's fantastic. I love that because then it gives you the ability to kind of touch back with them and say, oh, hey, I see that, you've got this going on now, tell me about your business and what's going on, and just to keep that relationship going.
Correct.
But
Absolutely.
yeah, and it was really that, when I'm out on the job sites and I'm talking with all the different trades and all the different guys and everything, how I can approach them, um, so that way they can benefit, they can grow their business, but then I can help and, be part of that. So
Yeah.
you answered all my questions and then some. I feel like I just need a lot more dialed in education with your specific portal.
Yep.
Yeah, and all of that. So yeah, no, I'm looking forward to doing business with you guys. It's
Same
great.
here, and genuinely welcome you to leverage our team in any way possible. You have a dedicated point of contact on the partnership side of the business. That's always a great first line of defense. But from there, if you ever need us to pull in, Steve specifically on a bigger transaction or get one of our business consultants involved to help answer some questions or help, do a call with you with any of the clients, we really want our partners to feel that, ROK Financial is at your disposal, right? We're an extension of you. And you can leverage us in any way fit to run your business as effectively as you could possibly run it.
No,
I
that's fantastic. That is because I got a lot of ground up stuff coming up and a lot of the bigger development things that are in play that I'll have a lot of questions on. So, Steve, I look forward to talking with you on those as well.
Likewise, now.
Thank you very much.
Thank you,
Thank
If
you.
don't mind, can we go back to
Jamie.
Jamie? Hey, Jamie, you there? You're back with us.
Yep, I'm here.
Alrighty. We had in the background, we were able to contact our partnership division and see what was going on there. So just to give some feedback to you, if there's any confusion in this, or any understanding on our side, obviously let's get it rectified after the call here. But basically what took place is we obviously, we work with 10,000 referral partners. Within that 10,000 referral partners, there's a few larger networks that we work with where these networks are basically training individuals on how to become a business loan broker or how to get in the business loan broker business. And sometimes in those networks, they promote purchasing leads. It's not necessarily a bad thing. It's all good to purchase leads, but sometimes when you purchase a list of leads, you're not really sure of the quality of what's in that list. So we do have, to be fair to all of our partners, right? We want to make sure that all of our partners know that if they refer a deal to us, we're going to do our best to work that deal, turn over every leaf possible to try to convert on that lead for our referral partner. So the best way for us to do this is to make sure that we're monitoring the leads that are being submitted to us and monitoring the partners that are submitting leads to us. And I think you got caught in a little bit of a formula that's in our system. So basically we track conversion, right? So if you submitted, 100 leads to us and only 8 of those leads, had connectivity or filled out an application, we're basically working on an 8% conversion on the leads that you sent over to us. So I believe we ingested a large list of leads from you. I believe you come from one of those larger networks on top of what you do on YouTube and whatnot. And it seems like there was a large batch of data that was uploaded to us, and the conversion on that batch of data was having a low success rate. So basically everything that got referred over with that batch basically just got kind of coded as bad data in a sense. Connectivities, you know, we have a lot, we can share all the statistics with you. We track all of this in Salesforce, but I think out of the first 25 numbers that were called, there were 23 that had incorrect contact information, like bad phone numbers. And then we had a lot of people telling us that they never applied for business financing. So, you know, we also, you know, we want to make sure that we're always, you know, and that's why we promote.
I mine, because I called them, we called them, and I have another company that called them too. I have a telemarketing company that called them, qualified them, got the information, transferred them over to me. I spoke to them. I put their information in the system, and I said to expect a call from somebody from ROK. That is my partner, ROK Financial.
Gotcha.
So those numbers were working then. How
I'm
come they
not
don't
sure
work
why the
24 hours?
disconnect then, you know, so let's connect after this call. I do want to show you, we have printout of all this. I do want to send that over to you so you know that we did actually capture this data. And then, you know, I don't know if there was something that happened with the upload of the data or whatever the case may be, but I want you to know, let's take a look into it. Let's dissect this thing. You know, we, again, all of our efforts, we don't want to turn any partner or any business owner away. We want to try to help as many as we can. It's why we continuously invest in something like we're doing right now with the commercial division, why we're constantly growing our partnership base. So, you know, obviously not working leads or not supporting partners would directly go against the efforts that are taking place right here on this call. So I hear you loud and clear, and you'll get my personal attention on this. We'll work through this one-on-one. But you know, just I was, you know, presented the information, and this was the, you know, the result of what we got from the leads that were uploaded. So maybe there's a disconnect somewhere. Maybe something took place. Let's dig into it and figure that out. But I at least wanted to circle back to you and let you know that I was going to take that seriously and look into it.
Okay. Thank you. Perfect.
All right. We're going to be in touch within an hour.
Okay. Thank you.
Thank you. All right. Who do we got next? It's 2:53. What do we run until 3:00?
Yeah.
All right, cool. We're going to try to take as many more calls as we can. Either we have to run a few minutes over. You know, again, we got a lot of value out of talking to the partners. So, Delroy?
Hey, how we doing, guys?
Good. How are you?
I'm awesome. Great information that you guys are giving to your partners. But I got a question, and this in regards to a partner. When we have a partner, can you guys give us a little information in regards when you have a partner that you're entering into your dashboard? And if you guys can touch a little bit on, a couple weeks ago, you guys talk about equipment finance, in which the equipment finance was regards to not just a piece of equipment, but it was more of, you said something like Starbucks chairs. I think you said something of the sort where like software as a service, those are considered as equipment. So the partner portal, if you guys can touch on that, and if you can touch on the equipment that you talked about as software as a service can be financed as an equipment.
Absolutely. I'll let Tony answer your partner question, and then we'll let Steve go into the equipment.
Yeah. So just really quick, as far as like the partnership side of things, there are two ways that you can refer business to us. So you can refer direct business owners that are looking for funding, but you can also refer other partners. And that is also available in your portal, right? So you have two landing pages in your portal. One is for financing, if somebody's looking for capital. The other one is for partners. So if you know of somebody else that is looking to partner with us, you can share that link with them. They complete the link. They go through the same onboarding process that you went through. They get a point of contact just like you do. We customize a relationship with them that makes the most sense for them, and you get vision and an override on everything that they generate. And it's all, again, tracked back into your portal. So in your pipeline view, there's actually a few different pipelines. You'll have your own pipeline directly. You'll have the pipeline of your partners that you've referred, and then you'll have any deals that they've referred as well. And you have full vision on all of this. I know it sounds like a lot because we're just kind of talking about it and not necessarily showing it, but it's a really easy interface where you can just kind of click through and scope through your whole pipeline front to back. Does that kind of answer your question a bit about the partners and the portal? I just want to make sure I kind of understood correctly.
Sure. What would be the percentage split on that part?
So you get a standard 2.5% override on anything that comes from any other fundings that, you know, those partners may lead to.
And I'll, allow me, please, as the CEO, to jump in here for a second.
Please.
Just know, like, we start everybody at a standard 2.5% override, right? Obviously, we compensate to the direct referrer, strongly. And then there's the sales team involved, et cetera. So for the override, the idea is volume, right? If you can refer in a lot of partners and get a standard 2% override on all of the partners' traffic that you refer in, that could be a tremendous amount of business. However, that's just a starting point, right? And I'm putting that out there because it's the truth. If you have the ability to refer over quality partners, and we're seeing that realizing on the back end, then we're always going to do what makes sense, right? So we're open for negotiation, right? If you have the ability to refer a high number of referral partners that are going to be active, they're quality referral partners, we obviously wouldn't want to lose you, right? We would want to retain you and make sure that you're fed so that you continue to enjoy your relationship with us and to continue working. So the 2.5% override, it's a standard override. But there is the ability to increase that override based on, the quality of what you're able to refer over.
And realistically, it's your partnership, right? Not to go too crazy with it, but we have partners that only refer other partners. So yeah, they get a little bit higher of a rev share on that. We have partners that do a little bit of both, but they're very successful at both. So they get really strong rev shares. It's like Patrick just mentioned, we're open for negotiation. So, we can certainly have that conversation.
And honestly, I'm not
Awesome.
looking at a can of worms here, but it's just because I'm super transparent. It's the way that I operate. Any partner on the call, if you have quality traffic and that's what's holding you back from referring more deals to us or whatever the case is, you just simply got to speak up, right? Like that's it at the end of the day. Is we always like to make logical decisions, right? Like we're not going to sit here and do things that don't make sense. So if we have a partner that is a quality partner and there's business to be had there and they need to be compensated a little bit stronger, we're always open to that, up until the point that we've done as much as we can do. And at that point, we're not in control of things that are that we simply can't change. But
the economics of our business still have to make sense, but we know that there's definitely room for growth in there, and it's why our partner program has made it to where it is. It's definitely not one size fits all. I can assure you, it's customized in every aspect of how you send us the deals, the amount of commission you get, the type of marketing support, literally everything. There's partners that don't use this portal that we've talked about this whole time. Some of our biggest partners don't even utilize it. Why? Because we'll send them customized reporting that speaks to what they need to know. So again, I just wanted to make that point very clear. Like whatever your partnership needs, it's totally customized.
And we will always do what makes sense.
Yeah.
Awesome.
Oh, awesome. So can you guys touch about on the point about software as a service?
Right. So
and equipment financing. Go ahead.
Software. Let's touch on that first. So software as a service, right? So this is a very specific niche. Software as a service company is a company that develops a software, develops a product that users are going to download onto their, or either download or access through an app, download onto their computer or access via an app, and they'll have some sort of typically a subscription that's associated with provision of that service. We can leverage those contracts. We can leverage that recurring revenue and provide a line of credit or a sort of like AR financing, accounts receivables financing. We can treat that incoming software as a service revenue, recurring revenue, as a receivable, and we can leverage that as an asset. So absolutely, that can be leveraged. That is a newer type of product that has arrived over the last 2-3 years primarily. There's a lot of different companies that are starting to pop up offering that same type of financing structure. I am thoroughly familiar with it. I've structured several types of deals using software as a service as a structuring credit facilities for software as a service companies. So yes, that's absolutely an option. Again, very niche. It does have its own little particulars. We have to look at the recurring revenue. We have to look at the licensing fees. the subscription fees. There's a couple of different avenues that we have to really get into and breaking down and understanding how that income works, how that billing works. Outside of that, you're talking about equipment, furniture, like for a Starbucks location. Yeah, I mean, furniture that goes into a retail shop, that can all be leveraged. I mean, it's
business essential equipment.
Absolutely. It's required for operation of the business essential, as Tony just noted. So yeah, that can be leveraged.
Signage is a big one. Casing, in retail places.
Certainly.
Shelving, all of the stuff that we have here, right? Cameras, microphones, lights, signage, right? All that type of stuff. It's all under the equipment umbrella, essentially.
Yeah. So now typically we're going to look at those types of assets for equipment purchase only. We're not usually going to be able to leverage that for a cash out refi or, for structured debt purposes as a fixed asset, for example, or for a sale leaseback, for example. Those types of products usually wouldn't be available, but certainly for equipment purchase financing.
Awesome.
Okay, awesome. Thank
we
you.
helped answer some questions. We look forward to continuing to build a very strong relationship with you, and obviously appreciate the support, joining our webinar today.
Awesome. You guys is awesome. Thank you.
Thank you.
Thank you, Elroy.
All right, Adam.
Oh,
what's up, guys? How you doing?
What's going on? How are you?
How's it going, Adam?
I'm good, man. So I've been working with Tim, and we got some cool opportunities. We actually did a call today. The lady's going to need like $1 million line of credit, and her business is on track to do 23 million this year. So
wow.
You said that's a good opportunity. I'm learning quickly, and it's one of my main focuses. I had a conversation earlier with a dude who he's had a call center for a while. He's had I would call it average success, and he wants to restructure his whole business and get into the AI world of call centers and leveraging basically like a SaaS for businesses that can leverage it for sales, customer service, whatever, charge a monthly fee. And he's saying he's looking for 20 grand, which I don't know if that's even I was just going to fund them myself, but then I was like, well, maybe there's a program that you guys offer. So that's a little bit of money. Does it make sense for him just to self-fund, or what do you recommend somebody in that position?
Yeah. When it comes to the working capital and the revolving lines of credit, which is primarily what you would utilize, for a $20,000 funding, a lot of times it comes down to the industry. So I would just kind of be curious to see how the lenders view a call center type of industry. Do you have any information as far as the revenue the business is producing?
Yeah, we process his payments now, but
okay, that's helpful.
Yeah, and that's why I said, he's kind of he even said he's my personal credit sucks, and I'm like, well, damn, you've been in here for 15 years, what do you want to change? He's like, I've just been burnt out, I want to revamp my business and use AI, and I'm like, that's pretty smart, actually. Yeah. So it's a little bit. I look at that and I think, because he basically asked me to fund him, and I'm like, it's a little weird, but I'd love. So that's why I say I'd love to hear how you guys would structure it, if there's grants or anything like that. He's doing 10 grand a month in credit card sales. He's not a big account by any means.
He's doing 10 grand in credit card sales monthly?
Yeah, roughly.
Okay. There's still some old school lenders out there that love the credit card sales. And, typically on a working capital loan, somebody doing, 50,000 a month qualifies for 50,000, right?
Yeah.
When you go through the credit card sales, sometimes we can see those approvals double. So if somebody's doing, 50,000 a month, and they would typically be approved for 50,000. If they were doing that same 50,000 a month, but doing it through credit cards, then we could typically see that person get approved for up to 100,000. So if he's doing 10,000 a month consistently through the credit cards, then there is a good chance that we could secure him a $20,000 approval based on his credit card sales. So with that particular lead, on top of, asking for the most recent 3 months of business bank statements, we would probably request 3 to 4 months of the credit card processing statements as well, just to kind of verify that.
Sure.
So there certainly is opportunity based on the revenue that you're talking about. The bigger thing that stood out to me is just the industry type. It would be more about finding a lender that is comfortable lending to a call center. Might want to get a little bit better understanding of who his customers are and
how he
he
structured it to begin with.
Exactly. But yeah, no, this is definitely something that would be worth sending in and giving a shot here.
Cool. I'll get that info over to Tim. And then I had a question. You guys just talked about SaaS, and like you said that the accounts receivables can be seen as inventory. So 90% of my business is recurring revenue, and I want to get some money in like the first quarter of next year. Like after I do this year's taxes, like can you count credit card processing residuals as inventory and lend off of it, like collateralize it, or how would that work?
Well, so I want to just make a quick correction on the rhetoric here. So we wouldn't classify it as inventory. We would classify it similar to AR.
Gotcha. That's what I meant. I'm sorry, dude. My bad.
All good. All good. So subscription, regular subscription fees, recurring revenue. We want to get a breakdown. When we're looking at SaaS companies, we want to get an understanding of how their contract works. And typically they're billing on both sides, subscription and then some sort of an additional fee.
Sure.
Most cases. So we want to get an understanding. We want to start to separate recurring revenue from whatever those other fees are. And then from there, we can start to figure out a percentage, an advance rate that we can leverage on each one of those categories.
Cool. That makes sense.
Yeah. So, I mean, the key with these types of companies is consistency. It's consistency and growth development. So with the companies that we're working with that can finance SaaS, that's really what they're looking for. They're looking for a track record to get an understanding of what their average revenue looks like, to see if they have any off months, and to ensure that they are achieving growth, whether it be on a quarterly basis, annual basis, whatever it is, based on however long they've been in business and specifically what type of software as a service they're providing.
Nice. Okay, sweet, man. That's a good explanation.
Do you mind if I give if I plug you quickly?
Yeah, go ahead.
So Adam has a super unique technology that he put together, and for somebody like myself and my team here, every day we come to work to support small business owners. That's our main goal and our main initiative. And Adam, created a product that helps small business owners identify what they're actually paying in credit card rates, through their processors. So I think a lot of, business owners, especially in the retail or food and beverage businesses, they sign up with the credit card processor expecting a certain effective rate, and then those rates tend to increase over time with no notification back to the merchant or the business owner. So Adam came up with some really unique technology that helps them input, what they've actually paid in fees, what they've processed, to actually back out what the technical true effective rate is. And it's a huge tool for a business owner. So if you're a business owner on the call and you accept credit cards, or you're somebody that has customers like clients that are business owners that are accepting credit cards in their business, you may want to look up Rate Tracker. This is a tool and a resource. If you care about small business owners that accept credit cards in their business, they should know about Rate Tracker. So just kudos to you, Adam, for what you put together. Genuine. Nothing better than when your service or your product is actually serving a true purpose and genuinely helping small business owners. So thank you, Adam, for that. And Adam's a great guy. I know him personally. So anybody out there that could see value in giving that resource to their customer base or even themselves, look up Rate Tracker. They're a great company.
That's a brilliant product there, Adam.
And
thank you, dude. Thank you, Pat. I appreciate you guys.
Absolutely, brother. Thank you.
And one step further, if anybody wants to chat with Adam's team, we'll make sure that we get you over to them. Just reach out to your point of contact, and we'll make sure that we make that intro for you guys.
Thanks, Adam.
Thank you. Appreciate you guys. Absolutely.
All right. I think this was a great conversation today. There are still a few more hands raised. So what we're going to do is we're going to jot those names down. If you have your hand raised and we haven't called on you, we're going to take your name down, but just as a backup, in case you're not in our system for whatever reason, could you also just really quickly chatter your phone number or best point of contact, because we do want to touch base with everybody that was looking to touch base with us. We don't want to leave any hands uncalled upon. So we do carve out an hour. We know a lot of people carve out the time to sit here and join us, so we want to be respectful to that time. and we're going to start polling the audience more on different webinars and topics and things that you guys want to hear about. We want to continue to do more of these open forum Q&A roundtables. Never really wanted, like the whole podcast thing. It's like such a fad at the moment. And I love podcasts. I'm a podcast fan. If you have one, that's fantastic. Keep going. But for us, right, I don't want to be the jack of all trades and master of none, right? What we do is business finance. That's what we're great at. That's what we want to stay focused on. But a part of business finance is taking the time to engage with our partners and our customers. So we will, make it a point to continue to do more of these and make ourselves available. I know, we certainly enjoy doing it. But just on behalf of everybody here at the table today, thank everybody for taking the time and spending, your afternoon with us. And we will certainly, we always send out the webinars to everybody.
Thank you.
You'll get a copy of the webinar.
Thank you.
Our website, www.rok.biz. If you want to apply for business financing, you want to apply to be a partner, please, find us on social media, ROK Financial on Instagram. We got a pretty cool little TikTok page where we're throwing out little silly videos once a week. So we appreciate the support. We appreciate the following, and anything that we can do to continue to improve the services that we offer, please provide that feedback. We're more than wanting it.
Thank you guys again for taking so much time out with us. And make sure you keep an eye out, because we are already planning next month's webinar. So keep an eye out and you'll get an invite. And thanks for rocking out with us, guys.
Appreciate it.
Thank you all. Thank you for joining us. Have a great day.